Hi, everybody. Welcome back for another breakdown of DLTx with two of the greatest minds in the entire blockchain and digital assets industry. If you don't know these two individuals, you're about to here in just a moment. I'm your host today, Kyle Ellicott. I am joined by James Haft and David Johnston. Gentlemen, before we get into introductions, we'll actually save those for the end as we're continuing this series so everyone knows who you are. But I want to jump into today's topic. Last week, we covered a little bit about what is DLTx, what you both have done to create this great company that you're building and the team within and the future of the industries that you're focused on. But today I want to talk about mining. Mining has created a ton of conversation throughout all areas of the industry, to governments, to countries, and so much more around the world. And one of the biggest topics in that conversation has been energy usage, and more importantly, around environmental impact, or as some people have referred to it as the ESG conversation. So for our listeners, environment, social, and governance, and what the impact of mining has on all three of those. So James, I want to kick it off with you. What is this debate all about? Is mining really having an impact on the environment? And for future reference for our listeners, mining, we are referring to that of digital asset mining and the industry surrounding it. James, kick us off.
I think it's a two-part question because the mining originally, was around proof of work, where the security of the network was created by the expense and difficulty of creating of answering questions or burning electricity, and the industry has moved on to other more sophisticated methods, which are proving to be as attractive to the market, which is proof of stake, there's proof of humanity, there's proof of honesty, there's proof of existence, there's proof of storage. So you go on now. We really moved on from that. So I think that to the extent it was a discussion, it's actually changing away from this proof of stake, proof of work concept. But I think even when you look at proof of work, which honestly is my favorite still, as the most secure, robust way to secure a network, is to make it expensive for people to spoof and be bad actors. But having said that, I think the argument really is one of these typical human experiences where people decide what they want to say first, and then they come up with reasons as to why. And so if you look at mining for Bitcoin, which is the number one blockchain, it's the number one proof of work, it's the number one consumer of electricity in the blockchain space. The reality is that most of the electricity used for Bitcoin mining is actually renewable. And there's a lot of reasons for this. Both the causal arrow actually runs both ways in this equation, because Bitcoin is the most efficient and easiest way to store and move electricity. So all of a sudden, areas of electricity which were unable to serve humanity are now brought into bearing, and those tend to be renewable sources of geothermal, wind, solar, volcanoes, underground, steam vent, all these ways that are in Iceland or in Africa or in remote parts of Asia can now actually generate value and generate electricity in ways that are not harmful to the earth, and allow people to accumulate value in ways that they couldn't previously do. And so now you have areas of Africa and Asia and around the world who can actually participate in a world economy without being subjugated to the dollar, to the supremacy of the dollar, and can have a chance to have a universal basic income on a global scale, where they can basically take their resources and turn it into electricity. So I think that it's a nuanced argument. I think, yes, it does take electricity. It takes electricity to run the internet. It takes electricity to run our telephone network, and it's going to take electricity to run our source of value and truth, just like it takes electricity to create dollars and to run banks and to run investment banks.
That's a very, very good point. And I want to come to you next, David. James mentioned Asia. quite a few times. And of course, we're talking about the mining industry. And for those who may not be aware, there has also been a lot of conversation and general policy changes that have led to a shift in the mining landscape where miners have left or started to begin migrating from Southeast Asia to elsewhere. What impact could this have on the industry's future as these policy changes have led to this migration of miners elsewhere?
Well, I mean, the way I would sum it up is to quote the nomad capitalist, which is people go where they're treated best. And the sort of governance and regulatory uncertainty in Southeast Asia has been driving people out of those jurisdictions towards Western jurisdictions in North America, in Europe, to places where they respect things like property rights. And there's sort of a more stable approach when it comes to governance of, electricity rates and all these things. Back when Bitcoin mining was the Wild West and people were, throwing up rigs and they were only being used for 3 months or 6 months before you had to replace them with the next one. It was very, sort of temporary in nature, and you could effectively operate anywhere. But the industry is shifting to professionalized large operations that have big footprints, and we're talking $100 million data centers, and the equipment lasts for 3 or 4 years, right? And so all of a sudden, there's sort of an asset that can be captured, right? And if you have a local official who decides that that's his data center and not your data center, all of a sudden it's less attractive to be in a jurisdiction that sort of has that Wild West approach. And so we're seeing this shift. We've always focused our Bitcoin efforts in North America, and all of a sudden North America has gone from a few percent of the network to north of 20, 30% of the global Bitcoin hash rate. So I think that trend will continue as we go forward, and people will go where they're treated best.
Thank you, David. And want to dive into something big. Speaking of the mining industry and being treated best, you both, as DLTx, just recently announced a very unique partnership and project in the mining industry. You've told me a little bit about it. I've read the press release. Can you share a little bit more with those that are listening today on what this is and how big this is for the mining industry going forward?
Sure. So in short, DLTx is getting into Filecoin mining. We're big proponents of the protocol. We've been working with the community for a while. Our tech team has been involved since like before there was a mainnet, back when it was a testnet. And so we're really excited to, have finalized this project and announcement with Genesis that are providing about $20 million of capital to the project. We've also brought in other investors and partners into this, and really allows us to become one of the largest miners of Filecoin globally, but certainly we're expecting to be the largest over time in North America is one of our goals, right? So this is sort of a great project because it is an example of something that doesn't require a lot of electricity, right? The amount of electricity used by hard drives and storing, data on the cloud, which is effectively what Filecoin is radically less than Bitcoin, but it's really moving into a whole new use case, right? We're competing with an AWS, and Filecoin is far cheaper than using AWS already. And so we're seeing this huge growth of people moving towards Filecoin, and we're really excited about the protocol in general. So sort of continuing our mission and vision of providing that infrastructure for large public blockchains. That's what we want to do. Pick the best blockchains, go out there, build out these operational teams, get them massive funding, and then go build out that public infrastructure for blockchains.
I think that it's important to understand that there's more to the blockchain world than Bitcoin. And if you look at the public exposure of what's available on the public markets, it's Bitcoin, and a little bit of Ethereum, right? And so what we're doing now is we're really trying to be an agent of change to get the world to recognize that there's a broader investment opportunity here, and to be an ambassador for that change. We expect people to follow us. That shows that we have something interesting. We're not worried about competition. We expect competition, and honestly, that's how you keep yourself honest and keep yourself motivated. But you'll see that we're going to look at other protocols as well. And that really goes with our mission of becoming over time the flagship investment vehicle on the public markets for family offices, institutions, and retail investors to have a play in the new digital economy. And we intend to be, the easiest option for them, and hopefully have the highest name recognition for companies, for people that want to make these investments.
Yeah,
Wonderful.
I compare it to, if Google became the proxy of, your 50-year bet on the internet, we want DLTx to be people's proxy and 50-year bet on public blockchains.
Exactly.
I love it. James, David, thank you both very much. I know today was short and sweet around mining, but I think it gives the audience a good view into both your views and the view of just generally what's happening in the industry. James, where can everyone go to learn more about DLTx in general and connect with both of you?
DLTx.com is the place to learn about us. We're publicly traded on the Oslo Bourse. Our ticker is DLTX if you're interested in investing, and DLTx.com is our website, and everything we do there and all our perspectives are there.
Wonderful. David, James, thank you both very much. Everyone have a great day, and we'll talk with you soon.